Hi everyone, today is 22nd of July. We'll start with lower time frame. So yesterday I posted this particular path, a potential path. So let's go through it. If I had to start at a high level, I would say it's going through consolidation. Very simple. The consolidation, if I hide drawings for a moment, just for clarity. Okay, then we can clearly see this is upper bound, and this is a lower bound. Why we have to keep monitoring for now, or on to be on alert in a way. When I say alert, it's more from monitoring point of view or from awareness point of view that this consolidation is happening on the lower side. So that's why I have this rectangle, right? This rectangle that you see. Maybe I can make it a little bolder like this. So this is covering the boundary. Again, I'll go without drawings. So what we see here is this is low end. This is a high end, low end, high end. Yeah, high end, high end, more or less the same, right? So basically, it's now very clear that this is a trading range. Now this is perfectly horizontal one. Sometime, as I explained in last one, that sometime it goes horizontally and then goes upward sometimes or downwards, and sometimes it's mixed. For an example, if you just focus on this part, which is not as long as the current, but if you this is very much relevant or comparable. So you see this is perfect horizontal, where this is upper bound, this is lower bound. You can see this. Yeah, lower bound, upper bound, lower bound, then upper bound, lower bound. You see, like that. And then things changed where it made higher high like this, but not able to continue with a very long leg like this. I think somebody joined with, I had to mute. Right. So, and then it came down, not just came down. When it came down, look at what happened. It again touched the lower part, right? Which is similar to this. So what happened is the pattern, which was rectangular in nature, or the range was rectangular in nature, the range changed to something else. What? In that case, whether you call loudspeaker, we call broadening pattern, expanding pattern. Okay. So this is how it happened, that it kind of expanded. So here it expanded like this, right? Like this. So you see, this was earlier horizontal. Because of this leg, it became expanding, where it started with a narrower range and then the range increased like this, right? But later on, it didn't even go higher, but remained lower. And not just that, it made lower low. So what happened is, because of that, the angle of this particular pattern change, and then this is what we saw. Then it progressed in the same trajectory on the downside. You see what happens. What I'm trying to explain here is the consolidation has different nature. Okay, it could start with horizontal, it could then turn into upward, and then it could even prolong and then become something else. But that is simply the change in the shape. It's still consolidation. Okay, so this was not very I would say comfy kind of a consolidation, where it was like touch and go kind of a scenario. Similar, this one was shorter, I would say, but more violent or faster. The drop was very sharp, and of course the bounce was very sharp, so not everybody was ready for this. But this was explained in last week's video as well. There are different types of patterns that you could identify. So our job is to, and why the patterns are important. In TA, there are various techniques, like you use different tools, you different indicators, you use different oscillators. You sometimes the pattern could be candle pattern, where there are different. So you can search up there you will find tons of patterns. The pattern that I'm talking about is not candle patterns. It's about the shapes. Okay. These are like classical patterns, I would say. These are known for last 100 years. Many people don't know that this science is more than 100 years old. Okay. You know the Dow Jones Index. So the Dow was the first one actually who started technical analysis. Okay. So at that time, he put a bunch of stocks in one category, which we call Dow Jones Index. Of course, those time different stocks were there, but that's what he started. And so the concept of index was introduced. And then he created another stocks of index, which were related to, there were basically two indices. One is related to transportation and another was related to manufacturing, because at those time, 110, sorry, 1910, that kind of a era, there was no services sector, only manufacturing. So what he did, he basically created two index, one for manufacturing, another for transportation. And his idea was he would look for the transportation as a first primary indicator, and then a manufacturing index as a secondary. So his point was, if there is any downside, we call bad trend right now, but if there is a potential downtrend, he thinks he discovered that the transportation sector would get affected first, because naturally, if there is lesser demand in the market, then there would be lesser spending on logistic, and ultimately, because the manufacturing might happen for inventory, but the transportation, he found that it is to be looked at. So long story short, he was the person actually who started the basics of technical analysis, and he came up later. He actually he is called father of TA, by the way, if you are not aware. Okay. Dow. And there are Dow theories and all that you can study if you're interested in this subject. So since I talk about the classical pattern, the word classical brought me to the topic that I just shared. You can always find more details online. So that's very interesting. So my point is, this science is not new. This science actually has more attention. Why? Because earlier the plotting had to be done on paper. And can you imagine, you have price data, and you had, if you are supposed to plot for different stocks for different time frame, can you believe that amount of effort is required on paper, right? So that's why it was very difficult, and only few of them could understand and actually believe that it's this like a gold mine kind of a science. Okay, this is like very important, but it was not widespread because it is very, very tough, first of all, and probably those who knew probably kept within themselves, I believe. But when everything got computerized, I think it got momentum. The science, this technical analysis science, got momentum. And what happened is, because of the tool like this, we can, on a click of button, we can change the time frame. And what happens is, when you change the time frame, the pattern changes, because different time frame offers you different view, and different view actually allows you to detect different patterns. So this is some historical background behind this. So that's why after computer vision, the graphics and all, and tools like this, the technical analysis subject is in demand in a way. And not just demand, but more and more patterns are being found. Right? So there are new patterns, new structures are being found. But what I was talking about is like very old, 100 years old, classical patterns. That's why they are called classical patterns. So a little bit of theory just for those who are very interested in this subject. Okay, so let's get back to our main stuff. All right, so the point is, the pattern, what is the significance of pattern? Right? So pattern is like Let's say if I show you human figure, right? And if I just show you, I don't have to show whole human figure. If I show you only the forehead and eyes, you will say this particular living being is human, right? So you can distinguish ape and human even with a partial face, for example. Similarly, any kind of object in this world. So you don't need to know the whole entire or figure. Basically, partial figure is good enough to filter out. I'm not, sometimes if they are very similar, you need more details. But the point is, you can narrow down what that object is, even if there is partial. So what we do is, when price action creates pattern, TA tries to say whether this is lizard or whether this is ape. You know what I'm saying? And you would be wondering why. So lizard and ape, I'm just taking example. Consider lizard is pattern A, ape is pattern B, right? So what happens is there can be so many living beings, but as more and more details are revealed, you try to say this is like mammal or reptile. If there's a mammal, what kind of mammal? And then you refine and refine, and basically before the pattern ends you kind of conclude that what is the real subject here, right? So that's the science. And so what you can imagine is when the pattern is not fully complete or something is newly started, usually when it starts when there is major pump and major dump. When there is a major pump and major dump, the prior patterns vanishes and new pattern starts. So when the pump is over or when the dump is over, that's where the beginning of the pattern, I mean the pattern starts. And then the TA, latches on it and track it on different time frame and try to figure out what it's trying to do. Okay. So I hope this makes sense what I was talking about earlier, that first it is more horizontal, then it is more like a loudspeaker, like a widening pattern, broadening pattern, right? Expanding pattern. And then it could become kind of wedge kind of a pattern or flag pattern, whatever pattern. So this is what happens. So long story short, the patterns are important because it talks about the actual figure beneath it before that thing happened. Okay, whether you take pattern of head and shoulder, so when the head is being built or formed, you would know that potentially there is going to be right shoulder. Now when there is right shoulder, you know that what kind of shape it might create, and that tells you that there is a bounce coming because right shoulder is a bounce, for example. So likewise, so different patterns we identify to project, I would not say predict, project what might be the next move. That's the whole idea. That projection allows us to plan that what is the boundary. And the boundary is very important because this boundary is nothing from a pattern point of view. These boundaries actually define the support and resistance. And if TA changes the support and resistance, it is simply because the pattern is changing. And it is not about right or wrong. It is about refining. It is about relevance, right? So we have to be relevant to what is happening. So if I give you a support and tomorrow or day after, if I change you, of course, you would think, hey, why this guy has changed it? And the reason could be simply because there's some kind of price movement in last 2 days, which created something else. Basically, it has invalidated the pattern which was being tracked, and now new pattern has emerged, and now new pattern has new shape. That means the new boundary. That means new support and resistance, right? So this is just clarification and also education point of it's important that you know sometimes we have to change the support and resistance because simply because the underlying pattern is changing. Okay. Um, so that's about TA. This is about some patterns, and this is why the supports and patterns are supports and resistance need to be changed, or I would say tuned, because sometimes you turn on the radio, right? If there is noise, what we do, we tune it, right, to get the exact frequency. Tuning. It's about refining. It's about accuracy. Yeah. So it doesn't. So when someone changes the resistance support, it's not that previous one was wrong. It is just that the newer one is more accurate. Right? It's not about perfect. It's about refinement. Okay. So that's the goal, and this is a continuous process. And as I said, as long as this consolidation, so the consolidation is a very generic term and also a phase, and there are so many patterns. So what we do as a TA is we track different patterns during the consolidation, and there are tons of patterns, right? It could be um, like wedge or triangles or flag or so many patterns within that. And basically we try to see which one is being formed, and then we try to basically say what might be the next. Okay, that's the science basically. That's what so every day. So some patterns, if the pattern is on a visible on a daily time frame, then it has to be tracked on daily. If the pattern is weekly, right, higher time frame, then it has to be tracked weekly. It doesn't make so whatever. So because you know that the pattern changes, like for example, if you take a picture of your street, it is different. But if you take a picture at some elevation, let's say 1,000 feet, the picture changes. Your street is not changing, the landscape changes, the view changes. And if you go 10,000, and if you go to outer space, the whole entire thing changes. So things are not changing, the perspective changes, the pattern changes. Similarly, low time frame to high time frame or vice versa, like you change different time frame, so you get different views, and different views offer you different patterns, and collectively you try to decide what it's trying to do. And of course, the pattern which are at the higher time frame has more value. Remember, always remember that pattern prevails. But the lower time frame patterns are important because that gives you early signal. It's like there is active volcano, and there's one way that okay, there's smoke. So you look at the smoke from the far, and then you say there's a potential burst, okay, coming up, whatever you predict. That's one way, right? This is at high level. But if there is one more, you put sensor within the volcano and try to detect when the activity really begins. So what happens is that it's you get early indication, early, like, but there is downside also. Sometimes when you go lower in time frame, what happens is the pattern changes also. As I explained earlier, that sometimes the pattern is horizontal, then expanding, then some kind of a down, in this case, it was expanding on the upside, then it was expanding on the downside. You see, live example here. So likewise, so when you go lower time frame, that's the downside, that a pattern changes because it is the lower time frame patterns, and more data come at a lower time frame, and that changes the shape. That's why and but the TA has when TA has to do both on, right? TA has to track on the high time frame and also lower time frame. So advantage of tracking low time frame is to detect early changes. But the high time frame, then you have to see as a TA that okay, now the low time frame pattern is changing, let me see the high time frame. And I would say, okay, is there any change to the high time frame because the low time frame pattern has changed? If answer is yes, then we have to adjust accordingly. If answer is no, then we can say, okay, no matter what, at a lower time frame, it doesn't matter much because my higher time frame is not changing. So that gives you the confidence. Sometimes, say, you would be wondering why I or any other TA will say, okay, don't worry, there's no risk I see, even though there is some price action. And you would be wondering why this guy is saying there is nothing to worry. It is simply because my bigger landscape is not changing. My larger scheme is not changing. So that's the confidence. So it's not about my confidence from my mental strength. It's nothing to do with my mental strength. It is simply that what I see at a higher time frame is not changing. And what other are seeing is the lower time frame, which is changing. And 90% of the people, number is not important. What I'm saying is majority of the people look at a lower time frame, and that's why the pattern and the price action play with their mind. And that's why the volatility comes in their mind and they become volatile. And you think that I'm very stable. It's not like that. When I track at a lower time, I become volatile, but I don't get influenced. That's the only difference. Where inexperienced trader or TA would get influenced. So that's the only difference. So if you want to be a TA, you have to master both low time frame, high time frame, and then see that if the low time frame is changing the high time frame patterns. If it is not, then you can say nothing changed. So these are a few things that I would say. So there's no magic. It's not that I'm mentally strong. It's simply that I don't see any change in the higher time frame, and I say forget about it. It's nothing. Isn't kind of that particular, let's say, downside move or upside move hasn't changed anything, right? So I hope this kind of conversation with some example help you understand the science. So today I mean, I talked about some history as well, patterns and why patterns are important, why patterns are not just important, but why patterns need to be tracked at different time frame. And not just that, but why the supports the resistance need to be revised, right? There should not be any ego that why this support or resistance change, because there's nothing about there's nothing about being personal here. The price has changed, the market decided to do something different. Then what T has to do, T has to align. It's about aligning yourself to what market is doing. So what happens is majority of the trader and sometimes TA also suffer because they don't align with the market. Okay, and that's what happens. And you can align only when you're unbiased. You can align only if you're not emotionally attached. When you have bias, there is lag. Why? Because let's say you are super bullish and things are changing. Okay. So basically, if there's a white side of the spectrum and there is a black side of the spectrum, right? And there are big gray shades in between. If you are on the white side and things are changing towards the black side, there's more traversing because you have to go from one end to another end. But if you are in between, let's say you are being objective, you're not taking side, white or black, whatever, right? Then you can swing on both the sides or either side, I would say, swing on either side based on situation. So I think that comes after experience and this kind of conversation probably, that sometimes that angle is not known, and you had to some people, I mean, said it's difficult, and I always say it's not difficult once you know that there's no other way. So that's why when somebody is biased on one side, it's very difficult for him or her to change the side, right? And that's why there's lag, and that's why they lose, right? And some people, don't change at all. They are sticky, very sticky, and they're adamant, I would say, to their stand, and they don't change at all. And if TA is changing, it's not like politicians say, I said this thing 10 years ago and I'm still, so, continue to believe in this, my belief, and that's why you should vote for me. We are not like that. We say we are here for money, right? And we are like a sailor, and we don't have engine, means we are not driving the market is driving, means the wind is deciding the direction. So we have to understand the wind, and we have to change our direction based on what the direction wind is blowing. So that's the whole idea. So it's not about what we want, it's always about what market wants, and interpreting what market wants on both lower and high time frame, and then aligning our risk management with respect to that. And as part of this process, we have to change support, we have to change resistance, we have to sometimes change the direction, that now we are talking about higher side. Now we have to talk about lower side, unfortunately. So there will be some kind of, so that's swing trading basically. That okay, now we are following upside, but now what is the level where we will say we are neutral, and what is the level where we'll say downs? Some people, as I said, if they're believing bull, they never say talk about bull bear, and they don't even come to neutral. Some people, so point is, the wise people or wise traders understand that it's about making money. It's not about what we believe in. So belief has to be locked up somewhere else. Expectations need to be locked up somewhere else, in my point of view. And the goal should be, the only goal is to understand the market. And the TA is the tool of interpretation. It's not about the knowing the future. It's about interpretation. If I knew the I do a lot of hard work behind the scene that you don't see. You think I just drew one line, but there are so many thoughts behind going on, so much of analysis going on, which is not visible. It's like movie. When you watch 2 hours movie, there is like few months of preparation. So if you ignore the shooting, you think that it's just so simple. You know, it's not like that. So when you look at this chart, there's so much of, before drawing this line, I had to consider so many cases before I draw the line, because I feel that responsibility. So the point is, um, TA and trader both need to be open-minded, and we have to uh, be cognizant about the change, and we have to be we have to adapt to the situation. Okay. And be open-minded basically. So let's go into, I think this is important, because this is, as I said, the psychology of traders is more important than key levels. Because even if you know key levels, you're not able to execute. Because if the psychologically or somebody's not ready, yeah, like that. So both are important, knowing the key levels and ability to execute. Okay, so so if you look at this pattern, this is what I'm tracking at this moment, right? So of course, this is about BTC. Some coin might be pumping, like yesterday I posted some coin X, let's say. If then probably that has some independent move, but most of the coins would follow, especially the large cap would follow BTC. So that's why we spend a lot of time with BTC. Okay. So the BTC, so this is the range. So now, as per this path, there's likely to be a bounce, let's say, in a day or two, as per the pattern. This bounce could go much higher. So here, the peaks and the height of the peaks is not important. The shape is important. So this particular pattern could actually lead all the way to here or up to this much. And then there could be one more leg down and then go up. Now this leg down could be this much or this much or this much. So that's not important here. What is important is looking at the big picture here. It looks like it's unlikely to break out on the upside in next 2-3 days. Unlikely. That's more important. So this zigzag path could be of any height, endpoint points of view. So that's not important. The point is, if somebody is expecting that it is likely to go up from here on and break above, I would say unlikely, a very low probability. And now looking at the price action uh, and looking at the FOMC on 26th of this month, it looks like it's going to coincide. So we can say that's why we have this one. Maybe we can align. So this is 25th. It might dip on 25th, and then this could be the shape. So I have this arrow indicating this one. Why? Because this is more like a decision point. You know, So don't go by the price that Mihir said on 30,700. There's a decision. This is not what I mean. What I mean is there can be a slight bounce and a, one dip. So basically, you can say this is more like a box where it could something like this. It could move in this box, whatever way. Okay. And on 26th, either it will go with this one or go down. If the decision is not favorable to the market. So I hope you understand. So this is more like a flow chart where I think we should decide we should have decision on 26th, in my opinion. So maybe we can align to 26th. Just to approximately. So it should take off on 26th and then continue on the upside and should break about. And we have to see. And of course, if it is not favorable, then it could bounce a little, let's say, and then go down. Because what we have seen in FOMC, it takes out both support and resistance. I mean, it moves in both the direction with some kind of some volatility, like extreme move. So it would take out stop loss for the short and long leverage traders, because leverage traders would have very close stop losses. So typically, and it this is what I observed, like in many meetings during the meeting, that it would go up or down. Ultimately, it would decide the direction, but it would move in both direction and wipe out all the stop losses. As if like it wants liquidity, because they know that on a day people would decide up or down and they would have very close stop loss. So it tends to move in both directions. You must have noticed. Right. So on FMC, sometimes not financial advice. If somebody's on trade, the stop has to be beyond the range. So in this case, this is the range. We know that, right? And upside, if somebody is shorted, then it must be about this. And whatever is the distance, you have to decide which distance, what is the risk in terms of percentage. So you have to have this kind of wiggle room come 26th of July, right? So as I said, this swing could be extreme, where it could touch both the endpoints. Yeah, and there has to be stops somewhere, and that stop has to be beyond this edges, whatever direction you decide. Because right now, when it is consolidating, the breakout could happen on any side, because the higher time frame indicating the bounce, which we'll see on a weekly time frame, the probability of upside breakout has more. So it's not 50-50. Okay. If I have to give probability, still the upside probability is 60 or a little higher. I would not say 90, because that's highly probable consequence in that case. It's not 90, but I would say above 50. So if from a high time frame point of view, if you look at local, this particular pattern, then it is in a total equilibrium. So it must be 50-50. In fact, from a low time frame point of view, because it's consolidating on a lower side, the downside has 60% probability downside. Remember, when I say downside, I'm not talking about crash. I'm talking about breaking below this one. So it has a probability of 60% and 40% on the upside. But when you track it weekly, the probability changes, because you're not tracking this pattern. You're tracking something else. And that's why the education that I shared earlier is very important, that the probability changes because it depends on what you're tracking. Got it. An example, if the temperature changes even day. So when temperature goes down in the summer like this, if you're on the northern hemisphere, so this is summer, but temperature dips. But you don't say that it's winter. But from a tracking point of view, you find that temperature varies day and night, even in the summer, even in the winter as well. So because the temperature dips, you don't say winter has begun. Because the season has a longer cycle. So day temperature is like tracking this kind of pattern. So this, when I say the probability of downside is 60%, means more, because it's consolidating on the support, let's say, right? So it doesn't mean that we are talking about crash. We are not talking about crash because the higher time frame is in favor of the upside, right? So the summer is going on. If the temperature dips because of some kind of a storm for a day or two, it doesn't change from summer to winter. Remember. So if you think that seasonality is like a cycle, right? Longer time frame. And the day temperature that you see is also variance, right? You see variance that is like intraday or some kind of a 1 day type of a time frame. So if you relate with this, probably you will be able to understand in a better way, especially those who are new. I'm trying to give different analogy, to explain this subject, because this subject is abstract in nature. So when there is abstraction, it's very difficult. You have to give some examples and give some analogy to visualize. Okay. And also, TA has a language. So when we talk in certain language, if I give this video to someone else who is not aware of technical at all, then it's like, some kind of gibberish, would not understand anything. That's why I had to keep in mind there are advanced TA or traders, and there are some new joiners who do not even aware of the terminology or the terms or words that I use related to technical analysis. That's why I had to mix up different examples and analogy for them to visualize. Okay, so I hope this is so we will now. I think we should zoom out and go higher in time frame. Now, oops, arrow is probably. Yeah. So on 1 day, even if this goes for a lower one, it just change in the pattern. It doesn't destroy anything. That's what I would say. So I have added this level because it was required to cover potential change in pattern, because I'm not going to calculate and give you a pattern when it happens. So I have to give a scenario to you. So assume that next few days it's going to be volatile or flat, whatever. Basically, no action, as if somebody is waiting. Is like prey is waiting for the, predator is waiting for the prey. It's like that. And depends on what Mr. Ball decides. I think we should see. So this is how, and if you look at it, if you zoom out, maybe without drawing. So on 1 day, let's say, is there any other thing that I see? I don't see any value added pattern or any different thing. This is a leg up and this is consolidation. There's nothing else I can add here. So we must go on a larger time frame, higher time frame, that is weekly, and we should look at without drawing to start with. So I think I mentioned about this, that if you look at last 20 weeks, 21 weeks, since it started moving up from January, right, in last 6 months, basically, or this is 7th month, only a few weeks, especially only 4 weeks, this one, and this one, where the price action covered 90% plus or 95% of the price movement. So if you're not part of this move, you're not part of the game, or you haven't gained as a trader. I'm talking about BTC. And of course, the large cap is more or less similar. Um, Not all, but some, but especially Bitcoin. Um, so that's the nature. And I see this is similar. So when I compare, don't say, don't assume, because sometimes our mind, you know, if you learn more about your brain, it actually infer, it actually assume things. Yesterday I was watching one video from one of the neurologists, and then he was talking about the eye movement. 1/15th of the second in like there is no activity, a neural activity, because what happened when you move the eyes, there is no signal goes into your brain, or no neurons are fired. Basically, technically, you are blind, but brain has something that it kind of connects to frame and shows the continuous picture. So when we look at it, it shows the continuous picture as if there's nothing. So it actually seals two frame in a way that it doesn't show any gap. But from a signal analysis point of view, for a few microsecond, there is no signal when we move eyes, and we see continuous picture, but it's not. So the brain actually creates or supplements or substitute, I would say, substitute the missing piece, which is amazing. And we feel perception point of view, because I love understanding the perception part, the consciousness of, and it basically plug that vision in between, and then we see that everything is continuous, but it's not. So it's so fascinating. So when I say, I had to be very careful how mind interprets that. When I say this pattern is very similar to this pattern, when we can compare this hump with this hump, with this hump, with this hump, people will think that what Mihir is trying to say, a new bull market is going to begin. So that's why I gave an example of how mind behaves, like how our vision behaves similarly. We tend to infer, and we try to assume, and assumption is always based on our bias. Only the objective person who is neutral all the times, which is very hard to find. But there are people would say what he said, this is similar. That means he hasn't said that the bull market is going to come, because bull market will also could come, and it could be even stronger than this one. Who knows? And this could be the end of the story, where this is it. This is a leg down, and this is recovery bounce, as I always say, and that's it. And now that there is a downturn, and then one more bounce, another downturn, another bounce, another one, then the whole entire, then one more bounce and another leg down, which could go all the way to 10K, 12K, kind of a scenario point of view. So people would not think of this scenario. People would always think that this pattern, because what happens next. So it's not like that. The patterns are this kind of pattern. If I find that this pattern is similar to this structure, or right, it doesn't mean that the outcome of this, so outcome of this is going to be identical to this one. No, it doesn't mean that. It simply means that this is um, this is the point we have to track. So that means this boundary we have to track. And if this is broken, then we could see another leg up. But when TA finds something similar, we highlight it. Yeah, because in some cases it does fall, and some cases it doesn't. But we have to believe only when it happens. So until that time, we can attach probability and say that now this is a pattern, so this is probability. So okay, we can expect that this might happen, but we don't consider as truth that this is going to happen. You just consider as a scenario. Yeah, you can give weightage that now the weightage is 60% on the upside, 40% on the downside, which is perfectly all right. But then if things changes, you should be then change it to 50-50. If it continues to go down, you have to change, okay, now the downside has more weightage, and so on. So if you have that kind of mind, then you will go a long way. You will never see any kind of, and you will never be surprised from any kind of price action when you have that kind of mindset. So, but yeah, comparison point of view, this is recovery bounce, and potentially if this is able to close about 33K, I would say, because I need a couple of thousand, or 33K, 34K range that I'm seeing is very essential. If it is able to close about 34K, then we can announce that new bull run is beginning. Okay. There's one more level that I'll tell about in down the line, which is to be tracked, but that is not a big one. The big one is this, where I had highlighted here as well. And because this corrected here, this becomes a known resistance. When this didn't happen, this particular move didn't happen, not many people were aware of this one. But we had highlighted this is a resistance, right? But how deep it goes, nobody knows, right? But under identifying resistance is very important. Okay, so naturally, when it bounced, it is going to react on that one. And now we see the consolidation. We are focusing on this, but actually, if you look at it, focusing, actually, this is, you have to consider everything in mind from a larger picture point of view. If you look at the larger picture, this is what is happening. There's so many drawings, so it's cluttered a bit. Maybe let me find another chart, which, okay, this is cleaner. So, I mean, it doesn't have drawing at this level. So you see, this is what I want to show you. If you look at this band or range, this was heavy support, right? Heavy congestion. And this is heavy resistance. You can see that. You'll appreciate after this drawing, simple drawing, which now you're seeing. You'll appreciate that why the time is being spent. Sometimes, we get bored and we are frustrated and we kind of curse, hey, this is like so boring. You have to understand, this is a critical milestone. When it was moving up, this was the first major support before it started going down. And this support actually supported this particular massive downturn. 50-60% drop was supported by this particular support. And then it went up, but not able to break above this rejection point. If you look at it, came down. When it came down, of course, it penetrated, like it went down, but closing point of view, it retained. And not just that, it remained in this one before it melted further. So you see the importance of 29K to 30, 33, 34 kind of a range. Like this, if I cover, it's so essential. This is so important. And I hope you will, when I say appreciate, it means you will consider that, okay, it makes sense why it is spending time, because it's really a big one. It's a really big one. So it's about understanding. So once you understand, you develop patience. Some patience is always an outcome of understanding. Patience cannot be learned. Once you understand that it requires time, the patience is a byproduct. So with this view, you would understand that why it is taking time, technically speaking, right? In between, many things could happen from a range point of view. So the current range and the level that I gave you yesterday is important. And if that support is broken, and if traders do not change the view, it's the choice. So this is not about being optimistic and being pessimistic. These terms have no meaning. It's always about what is my key resistance and what is my key support from a trend point of view. If the resistance is broken, then I'm expecting, it's not that expectation from my bias. I'm expecting because it has achieved something. I'm awarding. My award is money. So I'm awarding means I'm putting more money into my trade because it has achieved something. What is the achievement? Breaking above resistance is an achievement, right? Breaking below support means it has degraded, and not necessarily one support decides. Like if a student fails in one subject, or even doesn't do in a particular grade, it doesn't mean the student useless. You have to see how many times that, then you can say that person is not capable, for an example, even in the job, right? One instance. So one support cannot be decisive. You have to, so that's why my best practices talk about multiple entries and multiple exits. I mean, ramp up and ramp down is so important, because this one particular one, support and resistance cannot be decisive. Yeah. Anyways, so that's about best practices. And it had those best practices, sometimes we had to bring in with examples, because it's very important. So even if this support is broken, doing nothing is not a good idea. And going extreme, assuming that everything is going to now fall apart, is also not a good idea. So you have the answer. Sometimes people look for my view, but I think Plutus sometimes says that try to understand his language, because I'm not a consultant to you, but I have to be careful that I'm TA. I don't cross my boundary and try to advise you. Though you are so much keen to know what I'm trying to, I mean, probably some people would expect me to copy what I do personally, but I cannot do. You have to understand. So, but if you are smart enough, you focus on my language, focus on words that I choose, focus on my tone, and you will be able to interpret it. Okay. So you have to find clues, basically. I'm not going to say do this and do that, because I'm not in the consulting. Right. Anyways, so that's also a clue. So I seen Plutus many times mentioned. So this kind of call is extremely important, and BTC updates are extremely important. Rest is okay. Yeah. So now you understand this range is so critical. And what we would like to see is, we would like to see consolidation near 30K, 31K range. I don't mind if even if BTC takes 2 weeks near 31K, I don't mind, because time is not important here. Where it consolidates is more important. If it consolidates more on 29K, that's not good for me as a TA. If it consolidates near 30, 31K, it's more important, because I don't care when it breaks above. Because when it breaks above, I know that it's going to be a big one, because that's how it is behaving. Like, you look at this candle, look at this candle, look at this candle. So if it consolidates here for a week or two, it doesn't matter, because if I get a nice big candle up to 40K, 41K, it's worth. And that's why we cannot miss, because this is how BTC is behaving. We cannot miss those. So in this case, 4 weeks were so important. 4 weeks is everything about last 21 weeks. So whenever that next week, that week cannot be missed. So so anyways, so the point is, this is how it is moving. And this behavior is because the bull run hasn't been started. If you look at the prior cycle, the bull run actually began here. I mean, there's difference between when the bull run starts and when the bottom happens. Remember, people don't explain this. I'm trying to explain from education point of view. Whether you believe it or not, it's up to you. When it goes down, this is bottom, okay, right? Relatively speaking, because it has gone up 100% on the upside. But there's a concept, and it's not my concept. It's a dead cat bounce concept. Dead cat bounce is a range basically is a range where TA decides, and everybody has different dead cat bounce range. It's not universal that Mihir has this, someone has ABC, TA has something else, XYZ has something else. Because TA, it depends on what methodology you use. My methodology or my way of TA says we are not in the bull run. So again, I'll clarify. Don't say that because Mir said we are not in the bull run, he said we are in the bear. That is the mind. There is a third phase I always talk about, which is the recovery phase. And I explained those who joined recently, when this was a leg down, remember when it went down, this move was 50-60%, and the recovery was 100%, because when it goes down 50-60%, the recovery was more than 100%. And look at this one, this is also 100%. You see the point? The point is, when it dropped 50-60%, which is equivalent to 100+%, which is equivalent, we cannot say the bear market began here. If any TA would say that the beginning of the bear market is here because it dropped 60%, which is equivalent to 100% move on the upside, then he or she is wrong. So when you when you track this one, in my definition, this is called recovery phase, and then this is the beginning of the bull. You can retrospectively say that this was the bottom, and people miss that. Then people say that this is the beginning and this is the end. It is so easy. But when you are here, you cannot say this is the beginning. You know what I'm saying? So you have to say, yes, retrospectively, this is the bull run. But when you're tracking it, when you're here, you cannot say this is bull run. You have to say this is recovery and it is about to complete the recovery phase. And when you see this breakout and when it closes about this cluster, you can say this is the beginning of the bull run. And then retrospectively say that, okay, this was the absolute bottom and now we are in the bull run. You see what I'm saying? So when you are drowning, when the water is at the chest level, you cannot say I'm drowned. It's a process of drowning, but you cannot say I'm drowned. I hope you understand. But if the water crosses your head, you can say you're drowned. But the process started earlier, but we don't call out you're drowned until your head is sunk. Makes sense? So this is a simple example, but this example will clarify what I mean. That process begins and we have to bifurcate. We have to name with different, we have to name it differently. So that's what I said. This is not bull run. This is recovery phase. And if it closes about this, we will call out beginning of the bull run somewhere here. And then if it continues to move up, then we can say this was the bottom and we are in the bull cycle. I hope this makes sense. Of course, this is my definition. If you ask someone else, the person may differ. I give my justification, right? And based on my conviction. Right. So when I say this is not bull run, one should not say this is bear trend. Okay. This is simply a recovery phase where one has to be, the probability of bull run is more because this is about to start. Where another leg has to actually break this one, it has to break this one, and then somewhere down the line, we'll calculate further. Then we can say, then only we can say this particular attempt failed. It's too early. It's so far at this moment. However, again, mind will assume that Mir said because 24 level only it will be called out as a failed attempt. That means we do nothing. I'm not giving advice, but the smart people understand that each support right? Each support, breaking of each support can be taken as risk, and reduction of risk should be part of the game plan. I mean, you know, so it's not about, so of course, if I say 24K is the level where we'll call out that this recovery is fake, let's say, hypothetical, it doesn't mean do nothing until 24K is seen. It's a choice. Of course, it's up to you as a trader. But one should not assume that there is nothing to be done. Because what if it reaches 24K? Scenario could be that's the last level, assume it's the last level, and it could actually go up from there, right? So what then okay, but what if at 24K it reaches and bounce was not good enough and then fails in a real way? Then people get shocked. Then oh, I should have sold this. So people always regret. Okay. And smart people do not regret. They always plan. First of all, they understand that the right way is incremental approach, because another analogy I tend to used to give, is so important because this is so important phase. I had to give different ways to that. Let's say you are standing near a tree and assume there is a branch close by you, like, and assume that you can bend that branch. If you pull that branch down, the branch is not going to, I mean, you're not going to break that branch because there is some kind of agility, some kind of tolerance. But it has a threshold point beyond which, if you try to pull that branch, it's going to break. But what if you pull, but not doesn't go beyond its threshold point or break even point? What happens if you release it? It goes back. So similarly, think that this is a branch. When the price goes down, it's like a bending process. So you see, this is bending process. So when this is going up, this is a branch. You are pulling down, but the pull is not deep enough, which would break the branch. Then what you see, you release the branch, and then the branch grows. Again, what happens? The branch, you are pulling the branch down. I'm saying you as in, like, just to visualize what market is. Of course, this market is doing this, but I'm taking this example that you are trying to do this. So this is what market is doing. But again, the market hasn't pulled this branch enough, which will break it. And then another one. So this hasn't grown yet. This is more or less the same. But the point I'm trying to make, there are going to be pulls like this. Okay. But we have to understand how much or where, at what extent it will break. And Tia can find out. And hypothetically, let's say if that number is 24K, are you going to wait for 24K? Because what if the pull continues? Then person who is not prepared would regret that I should have sold when it was 31K or 30K, right? You cannot say that. You cannot say that because you didn't do anything, because you didn't plan anything. Okay. It's just not taking the responsibility. Regret is nothing, basically. Is the people who do not take responsibility, in my opinion. So when you plan that, okay, let me reduce, then there's no problem, and come 24K. In fact, is the person who has money in hand could buy at low. That's the beauty. But it always personal decision. So smart people use support for risk reduction. Smart people use resistance for more positions they add, basically, because then they ride. So this is this is swing trading. Typically, this is how I believe. I mean, there is no book that textbook defining the rules, but this is my own style. I wanted to spend a lot of time on this one because next time we'll meet on 27th, and 26th is a meeting. And inflation is core inflation is still sticky. Energy prices are bouncing, and the core inflation is excluding the energy price, which are sticky, means they are not coming down. The CPI, the overall inflation is coming down, which includes the energy and food. And because the natural gas and crude oils are falling for last 1 year, of last 9 months at least, in case. But yeah, 1 year. That's why the inflation is cooling off, in my opinion. And of course, there's improvement in supply chain, but the China is also not doing well. So there's some impact on Chinese economy slowing down. So we are entering into a phase where the growth could be slow. And if there is something bad happens when Fed becomes very aggressive, then not just slowness, but probably it will hamper and affect the price action in that point of view. So the point is, we are definitely at a defining stage, both from technically and also from fundamental point of view, from a macroeconomic point of view. I'll quickly show you the chart of crude oil today. So this is Brent, which is US based, and then there's another one which is similar, so which is good. Look, so if you look at the top, was in June 2022, so a year, and this is potential bottom. I'm not saying bottom. This is bouncing. So because of this drop, it helped in inflation, overall inflation, right? But the core is sticky. Core doesn't count this. The core is sticky, and Fed focusing on core. So that's why market is expecting 25 basis point rate hike this coming week, right? And so if the crude goes up, naturally the price will go up for the food, transportation, and everything. If that happens, then the CPI will also go up, for not for the July month, but probably for the August month, because you know that there's lag. So crude oil is bouncing is a point of concern to me from inflation point of view. And inflation is tied up with what Fed does. And what Fed does, it ties up with what Bitcoin might do, right? So everything is correlated. So now I'm coming on to fundamentals, macroeconomic fundamentals. I'm not an expert, but whatever I could learn, I'm trying to share. Of course, with use of TA, you can see that so I'm using TA, I'm identifying that the crude is indicating reversal. It hasn't reversed, it is indicating. So this is a potential bottom, and it's recovering. And if it continues to go up, it could reclaim and potentially create inverse head, where you can say this is shoulder and this is head, and then a breakout on the upside. Very, very dangerous scenario in that case. Dangerous in a way. Not a favorable scenario, not dangerous. So I mean, it's not a favorable scenario. If that happens, even if this much is happened, forget about inverted head and shoulder, forget about that. Even this happens, it will put immense pressure on inflation. You know that. So this is about the oil. Same thing with the international oil, not just Brent oil. It is also in the process of recovering. Okay, this is a potential bottom. So that if you look at, so oil is now, you know, if you look at the natural gas, US price is different, European price is different. Okay, so let's go through natural gas. This is US natural gas. Okay, and again, look at when it was stopped, right? September, August. So you can see clearly 1 year downtrend, very similar to crude oil. So two of the main energy sources have actually crashed in a way. They literally crashed. If you look at this one, 80% drop is crash. Yeah, and you can say this is a mini bear market, right? For 1 year of downtrend, and that helped. So it's not that it, some kind of a government policy helped. And to me, this thing helped. 1 year of downtrend helped the overall inflation. But look at this bottom formation. This is dangerous. Not favorable, right? So if it continues to go down, so it's not going to change for the July. I think if this continues to go on, even this particular move that you see is going to change something in further July. And if it breaks out on the upside, because what you see that it's likely to go up. And if it, like what I said for the crude oil, I would like to draw something like this. And I mentioned about natural gas. I tweeted as well. If it recovers like this is going to be a problem, a big problem. I'll tell you, this is a US one. Okay. The real problem why UK and other European economies suffered, what happened to the energy prices, the energy bills, those who are in the European region, what happened. And look at, so your chart is different than the one in the US, right? But you can see that this is bottom. So I'm going to go for the European one, which is Dutch TTF. You see what happened? Forget about crypto. Look at the pump. If you have not noticed, this was more than 10,000% of pump, which began in mid of 2020, not like 10 years, mid of 2020. In just 2 years, it pumped 10,000 percentage. It's like this could beat any crypto, or at least comparable to any super fast crypto. 10,000% gain in just 2 years, and that has actually destroyed everything, destroyed all kind of plan, and that's why the inflation was crazy in Europe. Remember, and there's always lag because there are always some reserves and always some contracts which would cover and stabilize the price. Remember, but when it goes on for 2 years like this, and 10,000 pump is no ordinary pump. That's why European face the energy crisis in terms of their bills and price they paid. Enormous. Of course, government would have put some money, so that way the load was not fully on the consumers. But look at the price. So then you would understand, even when government cannot do anything with this kind of pump. 10,000 percentage pump is no ordinary pump. And then, of course, when it went down, started going down from August, which is very similar, right? So for last 1 year, it dropped, and this is crash. But can you say this is 93% crash? But this kind of crash helped stabilizing the price. So you see what is happening. Even the UK and the European inflation is 8 to 10 kind of percentage rate. Even after 1 year of this kind of price is enormous. And that's the point of concern, in my opinion. And I'm saying bottom, potential bottom, and a recovery from here. So again, the smart trader may use this knowledge, you know what I'm saying, and hedge. So I'm giving some additional, so our platform is not just about crypto, it's about so many topics. You have to find out what you have to extract out a material or meanings out of what I say. So this is a potential bottom, and this is double bottom pattern, but likely to go up. And if this recovers, we're talking about even this much. My bad, wrong drawing object. This is 400 plus. Of course, if it continues fully, then 1,000, 10x. I'm not saying this has happened. I cannot say. But if this starts going up, that means what I'm trying to say is going to put pressure on inflation. So we have seen both Brent and other international oil price, which is indicating potential bottom. They're rising, and both European and the US natural gas, which so these are two main drivers, energy point of view. And if they are indicating potential bottom, we can definitely consider them in our inflation related equation. And inflation is the only thing that central governments, central banks, sorry, the Fed or any other central banks are considering. So it's not about getting scared of all this thing. It's always about, you know, it's about preparation. Okay. And yeah, it's all about knowing. And nothing changes overnight. There's enough time. But it's all about recognizing the change, as I mentioned earlier, and it's always about aligning to the market. I made money in bear market with my stock portfolio. Even in the 2022, when it was down, I made money because I bought some natural gas and crude oil. I made some money. Money can be made in any market. So bear market and bull market is asset specific. Remember, asset specific. When there was pandemic, remember, some stocks went down, but the healthcare related stock went up. When there's this work, if you look at some stocks, defense stock, they are still going up. There was no bear market. Look at some of the US defense sectors, like no bear market. So bear market and bull market is only when you are married to a particular asset. If you're not married to a particular asset, it's all about moving money. And this is what the big players do. They move money. The money is in the system. Money goes from one pocket to another. Pocket means sector to another, asset class to one. That's what they do. So some money have come into crypto, of course, and but I see that now some money is going into commodities like natural gas and oil. So it's not that they are opposite. They can go along together as well. There are phases where they do. But what I'm trying to say is recognize what is rising, recognize what is stagnant, recognize which has started taking U-turn. So it's about awareness, and it's based on what we understand and learn. It's about planning accordingly, and it's all about putting money where the trend is emerging. Okay, I hope you find this helpful, very important, because I'm trying to cover not just crypto but a larger topic, because it's very interesting, first of all, and secondly, it's related and relevant. So now look at DXY, which is another reference point. So I mentioned that this thing last week is going to attempt. Look at this one. What I didn't like is it paused. If you look at one day, it actually paused. Yeah, it went up to it actually consolidated here, went up some correction. So this one was little unfavorable, but if you there is some tolerance actually in a closing point of view. Yeah. Okay. Yeah. So let's go back. So it has broken above the support. Okay. On a weekly basis, we can consider that is unfavorable because the week has ended. Okay. So when it was here, we could say it was an attempt during the week, because by the Friday it could have gone down, but on Friday it didn't go down. It continued to stay, not just stay, but higher. So when you look at weekly, so I mentioned this in last week that this has broken, and because the week has closed below support, we can say that this is broken But sometimes in some exception cases, there are false breakdown cases. And sometimes it's all about realigning the support, because if you look at the pattern, if I realign with this one, then it actually not broken. If I change this, it will change everything. And then look at this one. And then this is a descending channel. You see how I changed it. I'm not manipulating. I'm realigning myself. I'm not manipulating. I'm not sticking to, because we tracked, but if there is new development, as I mentioned earlier, we have to see now what market is trying to do. It's about figuring out the next step. So we figured out that this orange line is the important one, and it rejected multiple times. And we figured out that this is a support. So when it went down, we knew this is a support. So unless this is broken, we were not accepting that this is going to break down, and it bounced. And when it bounced, it brought down crypto. And when it went down, unfortunately, crypto didn't go up. Don't ask me why, because we don't know that. It should have gone up. We can say that's a negative sign. Means when DXY bounced, BTC reacted inversely. But when DXY went down, it didn't react inversely. I mean, BTC didn't break up. Stock did. Remember, stock did. Stock pumped. If you look at the stock market, it pumped, but not crypto. So you can simply say it was disappointing that the money went into stocks, but not into crypto when this broke down, or when it was coming down for 2 weeks. That's a bit unfortunate. But we have to accept it. We cannot fight it. Okay, we cannot fight it. So if this is going up, but you can say the Bitcoin is holding up. So this is what I mentioned that on BTC analysis yesterday, I think, that when it went down, BTC didn't bounce. So because, and when this is going up, BTC is holding up. So what BTC is doing basically, it didn't react to the XY in one way from a larger scale point of view from last 4 weeks. So when the DXY was down, it didn't bump. When the DXY went up, it didn't dump. It is holding up the range, right? This is how it is, which is good in a way. So we can say DXY, it's on a higher time frame from a trend point of view. BTC somehow is not following DXY, not from a larger scale point of view. If you go closer, you will find some relevance, but in my point of view, it's not following DXY. But we have to study DXY because it's very important. We go, oh, it's 1.5 hours. This is very long, my goodness. Sorry for that. So let me fast forward a bit, because this is an endless topic. I can keep talking for an entire day. I'll keep this drawing for now. So this is DXY. So we have to see how far this goes. So this is unfavorable move, I would say, because it closed above the support. So unfavorable for now. But we have to see if it can sustain, because it could go up to this. You know, this is low point. So it's not about single price. We can say this is a range. So what if it doesn't go all the way and remain? So which is still fine, because if you look at the closing price, then it hasn't come to the closing price. If you look at from closing price, so there is always a range. It's not always about exact number. Right? It's not about exact number. Okay, so DXY is, we can say, borderline. So sometimes we can simply draw like this and consider this as a zone. Yeah, like this, not just one line, but a zone, which is fair. Look at this. So I'm connecting. So which is which is fair. So this is an edge. So you see what happens is the DXY is also an edge, right? Means it could recover fully or it could continue to go down. Or BTC is also an edge where it is on 31K, 30K range, where it could go and start a new leg up, or it could start retracing from here, which makes sense. Look at the bond yields. It got rejected. So this is still in consolidation. So these are the yields are coming down, which is a good thing. But this is more of a, so this is also going to be decided based on what Fed decides. No doubt about it. So you'll see either it will, so it went down as I projected like this, and it could continue to go up, or it could simply go down. I am giving some wiggle room here, some kind of zone, not just one level, but yeah, some area. So it could go up from here, or if it goes down, breaks below this, then yeah, then it goes down. So I would like this to break below this 3.55, let's say, and then you can see breakdown of the structure probabilistically. So yeah, you see different asset classes. If I summarize, BTC, we have gone through in detail. We have seen oil today. We have seen natural gas today. We have seen DXY today. Yeah, we are seeing this bond yields. You see so many different asset class, bond, commodities. DXY means what? Forex, right? And I have tweeted, not posted on anywhere, but I talked about NASDAQ resistance also. You can find my tweet if I mentioned yesterday. I also posted, so you can find it out. So I called out NASDAQ resistance as well before it started going down 2 days ago. So you can refer my tweet. Okay, so the point is all the asset classes are at a critical level. That's the summary. Yeah. So what happens from now on for next 2 weeks or so is the trend level event. Okay. So next 2 weeks is a trend level event. And that's the reason why I am spending so much time. I'm tired actually. Today I spoke a lot. See, we go through altcoin definitely quickly, but unless you understand all this, because this is the phase where it could swing on either side, depends on what happens in next 1 week or 2 weeks. So don't be so sensitive about 1 day's movement. Okay, that's my, yeah, we can say advice. Don't be so sensitive. Okay, let's try to see the big picture here, because we are talking about trend level event here. It's not about correction, interim corrections here. We're talking about decisive directional change in next 2 weeks. Okay, so I'll end here. I hope you find this useful. We'll talk about more next week.